Hello, everyone. Thanks for joining us on this Wednesday, and welcome to this educational presentation where today I want to talk to you about 3 price bars to success. And we're going to define what we actually mean by success in this particular presentation. This is a 3-bar method that is extremely simple, but you'll see how powerful it is just by using a very specific tool. Let's take a look at this example here in Novavax, this older example coming into last month. As we look at this chart, basically the stock was doing nothing. This was a very inexpensive stock, and someone looking at this would say, well, there's nothing happening here. We're just kind of going sideways. And so for all intents and purposes, I know this is an inexpensive $5, $6 stock, but I'm not going to do anything until I get an idea. Maybe I wait till the earnings to come out. Maybe I wait to see what the market does. This is the way most of us make our trading decisions. But by using this simple 3-bar pattern, you would have known actually in advance when it looked as if nothing was happening that there was actually a buy setup right here. Now, this was a setup telling you that there's a high probability that the market's going to go up to the upside, and it's going to actually have a very strong move to the upside. And as we see later on, the stock did. In fact, a week or two later, it gapped up and continued to go upwards of 20 points. So this is what we're going to share with you today. This is 3 price bars to success, and we'll define exactly what we mean by success in this educational presentation. And everything you're seeing today is being displayed on our platform, the platform I developed and designed with Pro Trader Strategies. This is the PTS Primo charting platform that actually teaches you how to become a consistent trader. Welcome, and thank you once again for attending today. My name is Steven Primo. I am the president and founder of Specialist Trading. Now, I've been trading now for 47 years, going on 5 decades, if you can believe it. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Specialist is just someone who made markets in roughly about 50 or 60 stocks. So I made markets during the crash of '87, the bull market that followed. And in my time on the floor, I traded just about every market environment, every trading technique you can think of. I traded straight up markets, straight down markets, sideways markets. I traded every system, every methodology you can think of. Most likely, if you're trading something that you think is brand new, it's pretty much been around already. It's just already just been rebranded and renamed. So I know what works in my nearly 5 decades of trading, and I know what doesn't work. So I formulated Specialist Trading about 15 years ago with one goal in mind, and that was simply to educate traders all of these things that I have found have high levels of consistency. And you'll see that in today's educational presentation. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using this 3-bar method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, since we are an educational company, all examples are strictly for educational purposes only. I see a lot of new names here in today's Wednesday class. So if you haven't done so already, please, I'd like to invite all of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. I would suggest copying that down, because every day I post upwards of 5 or 7 different snapshots of signals our strategies have generated recently. I also post different bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter or X, however you'd like to call it. Now remember, we are an educational company. We're a little bit different from other webinars you may have attended. I say this each and every time, but I still get questions at the end of the presentation asking me this. But remember, if you've come here today looking for me to tell you what I think the market's going to do, is it going to top out? Is it going to keep going higher? Is this the best stock to buy or the best time frame to trade? Remember, those are things that we teach you in our course for you to decide. In other words, every trader should trade according to their own means. We may have a trader who says, you know what, the best time frame is a 15-minute time frame. That works perfectly. I get the best signals. Someone else would say, no, the best time frame is a weekly time frame. Those are the best, most consistent signals. 2 traders aren't wrong if they're trading the same method. It's just that everyone's different. We come in with different risk parameters, different ways in which to trade. A trader may want to trade 5-10 times a day. Another trader may want to trade only twice or so a week. So everyone has to decide for themselves. There is no way in which to say what someone thinks is going to happen to the market. We all share with you what we feel determines what the market wants to do, but then it's up to you to decide. This is the only way you can become a consistent trader, by making your own decisions. Because most traders do the exact opposite. They listen to some guy after the market closes to find out what he thinks the market's going to do, or they wait for the earnings to find out what they should do, whether they should buy or sell. And this is really a disaster, in my opinion. This leads to a disaster because I did the same thing 47 years ago, and it couldn't work for me. I couldn't make a dime my first 2 years of trading. So why would those things automatically start working now? Most of the reason why you're probably here is because you've had a difficult time in trading lately, and that's okay. Most traders fail. It's been upward estimated of 80 to 85%. So if you're having difficulty, come on board as a student of mine, and we can put the power back in your hands, because our goal is not to force feed you signals. It's not to tell you what we think the market's going to do, but my goal is to teach you how to trade with a specialist edge. Now, when I was struggling some 47 years ago, this was the edge that was taught to me. Hopefully it can sustain you as well for the next 4 decades, okay? Now, a few things before we begin. Please remember that this is being recorded, so if you have to leave early, if you're having a issue with your seeing the screen or hearing me properly, don't worry, each and every one of you will get a link to this recording. Also, if you do have a question, please wait till the end. We have a good crowd here today, and I don't want to stop for every slide. So please write down or try to remember your question. I promise I will get to it at the very end, okay? Okay, with that stated, let's begin today's educational presentation. And I'd like to start out by something that my mentors taught me, because as I stated earlier, and I've stated in numerous presentations, that I struggled my first 2 years on the floor of the exchange, even though I had access to advanced information, even though it wasn't advanced by today's terms, but at that time it was. I still had a very difficult time. I was doing everything I had been taught, listening to the guys in the newsletters, listening to the guys on TV, waiting and listening for the earnings reports and the economic numbers, but nothing was sticking in terms of consistency. Sure, I'd have a good winter here or there, and then I'd give it all back. I'm sure many of you understand exactly what that's like. So my mentors, who were traders on the floor, saw how much I was struggling, and this is what they said today to me. This is what my mentors taught me nearly 5 decades ago on the trading floor of the stock exchange. They said, in order to become successful, you need to learn how to listen to the market. And I didn't understand what that meant, because I said, well, I'm listening to the market. If the market's going up, I should, look for it to top out. If it's going down, I look for it to be oversold. I listen to the guys on TV. They tell me what they think the market's going to do. But they explained to me that I'm not listening to the market. I'm not listening to the chart in front of me. I'm listening to what other people think the market's going to do, or other indicators or other announcements are saying that the market's supposed to do. And that's why I was failing. But once I learned how to listen to the market, well, that's when my trading turned around. So what do we mean by listening to the market, though? Because I'm sure everyone would say, well, sure, I listen to the market. The earnings are good, or economic news is good, so the market is telling me it wants to go up, right? Well, here's a perfect example. Someone looking at this older chart in Zion would say, well, sure, I'm listening to the market. It's going down, so I either want to short it or I want to get out of the way. And just as it says here, just when you think the market is headed in one direction, then look what happens. If you're out of the way and you weren't doing anything, well, you missed this big rally. Or if you were short, thinking that the market was telling you wanted to go lower, it caused a large loss in your account, because all of a sudden the market went straight up. So this is why we have trouble listening to the market, because we're usually a day late and a dollar short. And we're not taught to listen to the market. See, the market is speaking another language, almost as if it's speaking French or speaking Portuguese or Spanish, something we don't understand. And we've got to learn that language. But how do we learn that? Well, it's easier to have a translator than to actually learn the language. So this is what we're going to be talking about today, a translator that translates what the market wants to do. And that translator is the PET D. Now, I've talked about the PET D for years now. But if you're new to my presentation, the PET D is a tool that I was first introduced to some decades ago on the floor of the exchange. At that time, we called it the formula, because it was a certain formula we had to calculate on a hand calculator. It was very cumbersome, and we couldn't trade it on an intraday basis because it was so complicated. So we only had to be able to use it at the end of day. Now, with the advent of high-speed computers and with programmers now, I developed it with proprietary strategies into a color bar tool that actually translates what the market wants to do on a tick-by-tick basis. So we've taken all the hard work out of it for you and made it a proprietary color bar tool. We call it our directional tool because it tells you what direction the market wants to go. So let's look at that chart again. All right. Now here's how simple it is. On our platform, as you can see here, where it says Pet D, simply click that on and the colors will automatically change. If the market wants to go lower, you'll see a series of red bars. And when the market wants to go higher, you'll see a series of green bars. Now, the Pet D is not designed to pick a top or a bottom. It's not an overbought, oversold tool. It's simply translating what the market wants to do. And it does this better than any other directional tool I've ever worked with. Anything, okay? So you'll only see the bars of the stock, the future, the currency pair. It makes no difference, either colored red or green. Now, I want to share with you a technique today, this 3-bar technique, because this is how it'll work. So once you see the first 3 bars, as we see right here, the first consecutive 3 bars, that's the signal that the market, most likely, there's a high probability it's going to continue to go lower, as it did right here, okay? That's it. That's how simple it is. But you must see 3 consecutive price bars of the same color. Now, all the bars continue to be red until we get to this point. Now, we have this first green bar. Is this telling you, wow, cover my shorts, time to go long? No, we need, in order to go long, we need a series of 3 consecutive green bars, the way we see right here. Now, this is telling us, yes, the market is now translating, I want to go higher. We shouldn't be short. We should go higher. And so look what happened. So this is the 3-bar technique we're talking about. This is how simple it is. All you need is the Pet D, and you want to see 3 consecutive red bars or 3 consecutive green bars. Now, does this work 100% of the time? No, nothing in the history of trading works 100% of the time. But it's been my experience that you have a high probability for success. By success, we mean longevity, by being able to stay in a trade longer and by being able to trade longer, to have some longevity in your success and your trading. This is a great, simple method, and let me share with you how easy it is to trade, okay? So let's look at trading technique, this technique using the Pet D. Oops, excuse me here. Let me just cut back. And remember, everything you're seeing today is being displayed using our platform. Now, remember, as I said earlier, when I had to trade with the Pet D in the old days on the market floor, you know, we had to hand calculate this for almost each and every bar here, and it was really cumbersome. It's so simple now on our platform. Everything is one click away. You simply click on the Pet D, and you'll see the bars automatically change either to red or green. This is the platform I developed with proprietary strategies so that you can become a consistent trader. All right, so let's start now. Let's take a look and start looking at CRDO, okay? As we look at this stock, we see, well, it's kind of going sideways, going nowhere. Don't really have an idea, and it's hard to say what this wants to do. So what's the first thing we can get our translator to tell us? Well, on our platform, simply click on the Pet D right here, okay? And you'll see the colors automatically appear. Now, even though we've been going lower, we have some up days here. You see how the candle closed up, but they're all colored or outlined red. So even though it looks like we're firming up, the Pet D is still translating that this market wants to go lower or we're still in a short-term downtrend, all right? But look what happened just 3 days later. We have 3 more bars, and they're all consecutive bars, now outlined green or colored green. So what is the market telling us? No earnings report came out. No guy on TV said anything. The market told us at this point with 3 consecutive green bars that it's time to look and get ready to go long because most likely we're going to have a high probability up move. And look what happened. This was just about a month ago, and the stock quickly moved up 9 points. Now, someone would say 9 points. Well, that's not a big move, Steve. Well, remember, this was an inexpensive $15, $16, $17 stock. Whoops. That was a 50% price gain in just about a month. Think if you were long Tesla. Think if you were long IBM and it gained 50% in just about a month. Okay. Let's look at PATH, P-A-T-H. All right. Once again, just looking at these 6 bars, hard to tell what's going on. Sure, it's going up, but kind of going sideways now. Let's see what our translator says. Click on the Pet D, and we see here that all the bars are green. Now, see, we have one down day here and another down day here, but look at, they're colored green. So even though we went down on those particular days, the Pet D is still saying that's okay. This is just a down day and a short-term uptrend. That's okay. So we're still looking at this from a buyer's perspective. But then what happens after this? 3 consecutive red bars. All right. So what is the market saying? The market's telling us that if we are long, might be a good idea to exit your position right now and use it as an exit strategy. Or if you're a more aggressive trader, maybe you want to go short or maybe buy some puts. It's up to you. Either way, you should not be long. And let's say you were long and you exited your position. Well, guess what? Based off these 3 bars right here, this 3-bar pattern, you would have saved yourself an 8-point loss once again. And look how price gap down here. 3 days after you saw that pattern, there was a gap to the downside. See how the market already translated for you in advance? All right, let's look at the chart we started with, Novavax, all right? Once again, looked as if nothing actually has happened right here, okay? We're sitting here thinking, wow. But we click on the PET D, and we see here that all the bars are red. So even though we're kind of going sideways, we're a $4 or $5 stock, there's no reason to buy this because it's still in a negative short-term trend, all right? But look what happens later. 3 bars now all colored or outlined green. Even though we're still going sideways, nothing much has happened. This is telling us, the market's telling us, it wants to go higher on the short term, and most likely it's going to be a pretty big move just off this 3-bar pattern. So if you were thinking about buying, this is good enough to get in. And look what happened. 20 points coming into last week. And once again, just a week after that 3-bar pattern, even though nothing happened, look at the gap up based off some news or some event. Remember, none of this is based off any fundamental information. It's not based on any news or economics or any announcements. It's solely based on market behavior. The beauty of market behavior is that oftentimes it will get you in before an announcement or some earnings report or some fundamental news even comes out. So as we see here, this is a perfect example. It got us in prior to that, and we could have taken advantage of 20 points. Let's look at FIVN. Once again, kind of drifting lower, but not enough to tell us what to do. But if we apply the translator, we see the last 3 bars were colored red. So if we're long this stock, this is a good signal maybe to get out, or maybe to raise our stop, or maybe if we're long 600 shares, maybe sell half of it. It's up to us, but we should not be looking at this as a buying opportunity. 3 bars, consecutive red bars, tells us that the market is telling us it wants to go lower. And you could have saved yourself 16 points coming into the first week of this month, last week. Let's look at this example in GameStop, okay? Now, we know this has been in the news. It's been a big stock. All the meme traders are looking at this. It's the meme stock based off an announcement some guy says, and everyone says, wow, you got to be quick because if you don't follow this guy, you won't know what's going on. Well, we don't follow anyone. Remember, that's why most traders fail, because you're listening to someone or something else tell you how to trade or what to do. If you learn to listen to the market, if you have a translator, you'll have that much more success. And by success, we mean longevity. For example, in GME, in April, coming into May last month, it was doing absolutely nothing. This was a $10, $12 stock just going absolutely sideways. It was a directionless market. But if we apply our PET D, we see here that even though it looked directionless, well, guess what? The last 3 bars were green. This was about a little over a month ago. So we knew well in advance that this wanted to go higher. We didn't have to wait for anyone to announce anything. We didn't have to wait for some guy to say or for all the whole, everyone to jump into the pool. We got in way in advance, and the stock was up 52 points in less than 3 weeks. I can't stress enough. If you learn how to listen to the market, you will be that much more successful. And by successful, I mean you will have longevity. Why? Because you're listening to the market. Okay. All right, let's look at ANF. All right, this is also coming into last month. Heading lower. Is it forming a base or making a ledge to go even lower? Well, we apply the PET D, and we see here, this is where students have trouble when they first start trading with the PET D. They say, well, Steve, I bought it here because there was a green bar and it didn't do anything. Remember, this technique requires 3 consecutive green bars. So there's no reason to buy anything right here because you'll see a splashing of 1 or 2 bars every once in a while out of sync. It doesn't mean anything. It's just like an aberration. We want to see 3 consecutive green bars. If we don't, well, then it continues to be in a negative trend. But look what happened. Coming into the beginning of May, now we have 3 consecutive green bars. If you notice, The first two bars were up days. This day was down. As you can see, it opened here and closed lower. But what color is it? It's green. All right, this goes against what most of us look at when we are trading with candlesticks. We don't care about if it's an up day, it's green. If it's down day, it's red. No, that's the more Americanized way that they invented so that people can understand what candlesticks are. Candlesticks are hollow bodies, okay? So if you have a down day, it can still be in an uptrend as it is here. So we have 3 consecutive green colored bars telling us there's going to be an up move. This was coming into the 1st of May. So that's what we're looking for in this 3-bar method. And the stock was up 75 points coming into a couple of weeks ago. Okay. This is extremely simple because for the first time, you're learning how to listen to the market. That's the success we're talking about, being able to listen to the market. Let's look at NICE, N-I-C-E. All right. Kind of heading lower, but is it going to bounce up? We have a doji here and an up day. Maybe it's a bullish engulfing pattern, or it looks like a morning star pattern if you're a candlestick trader. But we don't really focus on that much. What we do is focus on what the market is telling us first before we look at a pattern. And the market is telling us, I don't care what the pattern is, we're in a short-term downtrend. And we have 3 consecutive red bars. A down day, another down day, followed by an up day. But look at what color this up day is. It's colored red. So you can have an up day that's colored red. That's just telling you that it's an up day in a short-term downtrend market. That's just, it's hard to understand that concept for a lot of students. So imagine in the middle of winter. I live on the West Coast, and it gets maybe 40, 50 degrees here at the worst. But every once in a while, usually around Christmas Day, it gets to be 80 degrees. And everyone thinks, wow, that's amazing. It's, in the middle of December or end of December, here we are in the middle of winter, and it's 80 degrees, okay? But then what happens usually the next week, it's back down to 50 degrees, okay? It's the same way with this. You'll see an up bar, but it's colored red. Does that mean that, okay, we're going higher? No, it just means that it's like an 80-degree day in the middle of winter. Most likely it's going to continue lower, and look what happened. It did go lower, about 25 points. Now, you've got a nice gain here if you decided to go short, NICE. Maybe you bought the puts. And you can cover, we share with you different ways in which to exit. We have upwards of 6 or 7 ways to enter, 6 or 7 ways to exit, 6 or 7 ways to place your stop. Now, sure, you could have gotten out, but let's say you wanted to stay in for the long haul. Would you get out here? No, because you would need 3 consecutive green bars. We only have 2 consecutive, not enough, followed by a red bar. And then another green bar, not enough. We need 3 consecutive bars. So let's say you decided to stay in the trade. That would have been a wise decision because look what happened the very next day. It fell out of bed and continued lower down 95 points. All because we saw 3 consecutive red bars way here a good 2 months in advance. You see, most traders find out, well, I guess this is a bad stock right here when some news or some event happens and they say, gosh, I've already bought it, so I guess I have to buy more, and it continues to go lower. But if you learn how to listen to the market, if you have a translator, it told you well in advance to get out. And if you wanted to be aggressive, to actually go short. You could have potentially captured 95 points. All right, let's look at ASTS. Same thing we have here. We have the most bars are colored red. We have 2 colored green. Is that enough to go long? No. We have another red, but now we have 3 consecutive green bars. That is our signal that the market is telling us, not me, not some guy in a webinar, not some guy on TV, not some economic report. The market, the thing you're trading is telling us, it's translating, I'm most likely going to go higher, going to have a pretty good up move. Now, nothing happened in the next 2 weeks. Now, if you wanted to, sure, you can get out unchanged, because price is pretty much the same. This is an inexpensive $2 stock. But we still haven't seen 3 consecutive red bars. We saw 2 red bars here. So if you're holding true to holding on to this, well, you could have potentially gained 7.30 points. Not a lot, but remember, this is a $2 stock. That's a 300% price gain. Imagine you bought Tesla, and in a little over a month, it gained 300% in price. Okay? That would be the same thing. It's all very relative. All right, let's look at Costco, okay? This was coming into May. We had a series of red bars followed by 1, 2, 3 green bars. Once again, the last bar is down, but that's okay. It's still colored green. And what do we have here? Up 127 points coming into last week. Just, it doesn't get any easier than this when you know how to listen to the market. Now, a lot of our students trade currency pairs. So here's a 4-hour chart of the Swiss franc. Now here, students have trouble. They say, well, Steve, I know this is a 3-bar pattern. We have 3 consecutive red bars, but look, we've come down here pretty well. I just can't imagine going short now. I would have rather have gone short up here. Okay, well, that's up to you. But remember, this is a very consistent method and very consistent pattern. And you still could have captured roughly 150 pips or $1,500 per unit potentially if you stayed in the next 3 or 4 days, because it continued to go lower and all the bars were colored red by the pet D. That was a 4-hour chart. Let's look at a weekly chart of the British pound yen. Okay, the same concept applies here, but just reverse. We had 4 original red bars. Now we have 3 consecutive green bars. But these are all weekly bars. And someone looking at this would say, well, gosh, Steve, I don't know if I can buy. We've already had a nice rally. I would have liked to bought down here, but I don't feel comfortable. Okay, remember, our goal is just to point out and to educate you on these high probability setups. If you don't want to take the trade, that's fine. It's up to you. But this would have been a good one because 1,200 pips in the next 3 or 4 months. Okay, this is a weekly time frame. Let's go through the process here. This is MDB. Now, this chart is basically going sideways. Let's say you were interested in this stock, but maybe you want to buy some options. You weren't sure which way. The guy on TV is saying it's going to go higher. You don't know what the market's going to do, but you went to my webinar and you said, you know what? I'm going to learn how to listen to the market. So you become a student of mine in the Pet D course, and you try the Pet D. All you have to do is click it on our platform, and you see that, wow, all the bars are green. So, okay, so I guess it is going to go higher, at least for now. So you're thinking about buying it, but then what happens in the next 3 days? 1, 2, 3 consecutive red bars. So you say to yourself, wow, I can't buy this now. I was just about ready to get into this thing, but now it looks like it's going lower. I'm sure you could talk to someone in a chat room, or some guy on TV would say, why would you think it's going lower? This is actually a buy setup. You got to buy around here. And you would tell them the reason why it's going lower is because the market is translating to me it's going lower. The translator, the Pet D, is telling me that most likely there's a high probability the stock wants to go lower. This was just about 3 weeks ago, and look what happened. 125 points. And most people don't believe it until you have this big gap down right here. And they say, wow, I guess you were right. Okay. But isn't it funny how the market was announcing and translating a week in advance that I want to go lower? Let's look at this example in NVIDIA. Okay. This was coming into May. All right. Let's say you're a candlestick trader. Nothing wrong with candlesticks. We have a candlestick course, as a matter of fact, but we apply them entirely different than the way most traders do. Entirely different process. Now, most conventional candlestick traders would say, well, Steve, look at, there's a bearish engulfing pattern right here. And the stock fell down 2 days here. And then I have another one. So this is telling me that we're going to go much lower. These are 2 very negative, very bearish signs here. Okay. So you get short, maybe you buy the puts because we know it's an expensive stock, but look what happens. It goes straight up. And you say to yourself, wow, how's this happening? Well, it would have been a lot easier simply to click on the Pet D, as we see here on our green strategy tab, and the colors would change. And you'd say to yourself, well, before I did anything, I want to see if there's a 3-bar consecutive color change. And there was right here. So before you decided to go short, you wait for that color bar change. And this would have told you about a month and a half ago that NVIDIA wanted to go higher. It's not based on any earnings, not based on any announcements of what direction the company's going or how well it's doing, not based on what some guy said on TV, solely based on market behavior, on this formula that is the Pet D that translates on a tick-by-tick basis what any market wants to do. So you would have known to go long NVIDIA back in April, at the end of April, and you could have potentially captured nearly 400 points coming into last week. Okay. Now, this is what we mean here. We had 1 red bar, not enough to get out, and we had a number of down days. That's a down day, 2 down days, 2 big down days. But look what color they were. They're all colored green. Remember, this is just the same as the weather. This is just the same as since this is an up market, imagine summer where most of the days are 80, 90, 100 degrees. Every once in a while, in the middle of July or August, you'll get a cool 60-degree day. You think like, wow, is summer over in the middle of July? No, it's just an aberration. The same way on a strong uptrend. Every once in a while, you get a couple of down days. That's okay. The PET D is still telling you we're in summer. It's still green and it goes higher. We're still green and it goes higher. So this is the beauty of having the translator. It can be applied to any market, any time frame, any direction. So ask yourself, if you can believe it, we are nearly halfway through 2024. Can you believe it? It seemed like we were just in January a few days ago. Do you think this 3-bar petty technique could help your trading for the remainder of the year? Remember, we only have 6 months. Just from the examples I showed you, many of these just happened within the last month, within the last few weeks. Do you think they could have helped you? I think your answer is overwhelmingly yes. So because of that, we have a great discount for all of you attending today. This is our roadmap for any market special, all right? The PET D. This is our roadmap. We call it our roadmap because you can basically just tells you what the market wants to do on a tick-by-tick basis, which is our proprietary color bar algorithm. Now, here's the best thing about our course, the PET D course. Now, I just shared with you a 3-bar pattern technique. We're also going to include 2 more continuation techniques as well as 2 pullback trading techniques. And on top of that, we'll also have a trailing stop technique. So there's 5 different ways to trade this, to apply this. And there are literally dozens of ways that we go over in the course, but we're just going to share with you these initially because these are such powerful tools and ways in which to apply them. And you can also apply what we just shared with you today. Remember, you can apply it to any market, any strategy, and any time frame. Now, everything you saw today was displayed on our platform. Remember, I developed this with Pro Trader Strategies to make trading with the PET D simple. It's just one click on the platform, and you'll see the colors change from either green to red, all right? So here's what we're going to do. Till Friday only, till this Friday, if you decide to become a student of mine in the PET D course, we'll throw in a full year free of the platform. That's a great offer because that'll cost you, actually a year costs close to $2,000. We're going to throw that absolutely free for a full year. And you're not just going to get the PET D. There are a host of other things I've accumulated in my 47 years that you won't find anywhere else other than on the PTS Primo charting platform. For example, this is just the tip of the iceberg. You'll get the PET D access, but you'll also get our enhanced buy-sell line. That tells you 4 different ways how to find out what the overall trend is. A strength of trend tool telling you if a trend still has enough gas left in the tank or if it's running out of gas. You'll get over 90 of the most prominent technical indicators, auto-generated exit levels. This is another way in which to exit a trade. I did share with you that with one click, you'll be able to find out what it is. Personalized tech support. But the best thing, I think, in the tip of the iceberg is our signal scanner. You can simply scan for setups on a nightly basis or even intraday in a host of different markets. And we provide those lists for you like ETFs, NASDAQ, S&P 500, currency pairs, futures, and you can make up your own basket of stocks if you like and scan for them on a nightly basis. That's how great this is. Now, let me share with you one thing you could have scanned for just about a month ago. All right. Let's say you were a student of mine in the PET D course and you wanted to try out this 3-bar method. Well, you could have scanned and seen that there was something in Apple. Now, let me share with you what happened in Apple yesterday, because Apple really had a big up move. As you see here in Yahoo Finance, it says Apple hits first record year on hope AI will fuel upgrades. Okay, so it had a first record of the year. This was yesterday. Okay, Apple Inc. shares rallied to their first record since December on Tuesday as investor sentiment around the iPhone maker continues to improve. It soared 7.3% to 207.15, the biggest one-day jump since November 2022. Yada, yada, yada. Great news, right? Great fundamental news. And this is the way most traders trade. They would see this and say, wow, I've got to buy Yahoo because this is great news, right? In other words, if it's being announced, then it's obviously good, so I've got to get in, and that's why the stock went up. And here's where the news was announced. This was taken yesterday. Now, I know it's even higher today. But looking back in hindsight, I mean, look at this. Wouldn't you much rather have bought somewhere down here as opposed to here? And this is the way most traders trade. This is why they don't really see that success that they're looking for, because they're listening to an outside source, the news, some economic report, some guy in a chat room. What if you would have listened to the market? Well, you could have scanned using this 3-bar pattern, applied our pet D, and seen that right here, had you applied the pet D, you had 3 consecutive green bars. This was coming into May. This was at the end of April. So what was that telling you? The market was translating that it wants to go much higher. Now, was this based on some news? Did the CEO of Apple call me up and say, hey, Steve, we're going to make a major announcement about a month from now. We're going to make record highs in the stock. So you may want to tell your students to purchase Apple. No, we don't base any of our methods or strategies off of any news announcements. So how did we know to buy this? Because when you base it off market behavior, when you learn to listen to the market, oftentimes you know well in advance. In this case, we knew about a month and a half in advance that Apple wanted to go higher. Now, it took about 3 days for this to happen. We had even one red bar, but then ultimately it kicked in. We had down days here, the green bars, but look what happened. And now today it's even higher, last I checked. So you could have taken advantage when most people are talking about Apple. You could have said, well, I bought Apple a month and a half ago. I mean, I didn't know any of this news. So how did I know to buy it? Because you can say, I learned finally how to listen to the market. You see, that is our definition of success. Not listening to some guy on TV or not listening to some earnings report, but listening to the market. That is what success really means, because most people don't know how to listen to the market. The good news is we have a tool that translates what the market is saying, and that will allow you to be successful in listening to the market. That's a true definition of success. Finally learning how to cast away all this noise we've been listening to and learning how to listen to the market. Take your trading to the next level. Become a student of the Pet D course. We really feel it can help you, as you've seen with all these examples, these current examples. You know, most webinars you go to, you see these great examples, and then you look at the dates and they're a year or two earlier. You know, you want to see something that happened in the last month, the last week. Well, we've showed you a number of them just recently that happened with the Pet D. Become a student of mine in the Pet D course. All right, so let's break it down. Remember, this is our roadmap for any market, okay? Now, usually the Pet D course and application costs $49.95, close to $5,000. We're not going to charge you that today. And, you know, we add the platform, we're taking it up to close to $6,200. Here's what we're going to do. We're discounting it today for all the people attending. We're going to charge you only $39.95. You're going to save over $2,100, but that's only if you want to pay in full. If you want to pay in full, it's $39.95. But if you realize that $39.95 is still a little bit too high for your means here, don't worry. You can establish a payment plan with my sister site, proprietary Strategies. What this means is for a fraction of the price, a fraction of $39.95, you can put down a one-time payment and establish a payment plan, and you can still be up and running as early as today. You can still be up and running with a fraction of that $39.95. Now, by all means, if you want to just say, no, that's okay, I can purchase it, then great. Take advantage of this $21.64 savings and purchase this at $39.95, okay? Remember, that gives you, either way you decide to go, paying in full or taking a payment plan, you still have a full free year of the platform. And the platform comes with dozens of different techniques and methods already included that you can apply as well. All right, here's how to take advantage of this great offer. Contact my sister site, proprietary Strategies. They developed the platform with me. They're in charge of all the pricing and the discounts. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones. They would be happy to answer any question you have. Or if you're so interested, take your order over the phone. They can do that right now. But remember, there's absolutely no obligation. If you just want to get a quote on establishing a payment plan, if you'd like a little bit more information about the platform, don't worry, they can answer your questions and there's no obligation. But remember, this offer is for a limited time only. So if you're really interested in the Pet D, take advantage of it right now as soon as you can, okay? I'm going to leave this information up here on the screen. As I stated, if you have any questions concerning the Pet D or what we shared with you today, just simply click on your chat icon there in the Zoom little page there, or click on question and answer, Q&A, and I'll answer them as quickly as possible. Someone's asking, can this be applied to futures? Yes, I often state that my main market of choice is the futures market. I like to trade the E-mini futures, and I was trading them today using the Pet D. And guess what? Because the market was going higher, the bars I was looking on the particular time frame, we had 3 consecutive green bars. It was enough to get me in and capture this big long move to the upside. So I had a really nice long consecutive upward move in the market using this 3-bar pattern. So that's how simple it is. Yes, you can use it intraday if you're intraday trading Apple. If you're trading weekly bars, it makes no difference. And yes, I like to use it on E-mini futures when you get these large market bounces. Also, yeah, you can use, someone's asking, can we apply this to Forex? Yes, we have traders that apply it to Forex. There are a number of ways to use the PET-D. We just shared with you one of them, and they'll be explained in the course. Remember, you have roughly 5 different ways to apply them in the course. So this is just one of them we gave to you for free that works very well, and it's extremely, extremely simple, okay? If I have trouble understanding it, I've only been trading for a couple of weeks. Oh, don't worry. If you have trouble understanding anything, the next best thing to having me sit next to you is for you to have my personal email address. So everyone gets my private email. All of the questions come directly to me. If you want to email me after the close on the weekend before the opening, it makes no difference. I'll try to answer your questions as soon as possible, okay? So even though I can't travel to around the world and sit next to my students, we have students in over 115 countries in every state in the United States. I'd love to visit with all of them, but the next best thing is being able to email me, and I'll correspond with you over email, okay? You can send me snapshots of what you think, if this is a proper setup or not, or what you would do if I would approve, things of that nature. Lots of great ways to trade the PET-D, and I can explain them to you as well, okay? Any more questions? Okay, if we don't, I just want to thank you all for taking time out of your Wednesday. Remember, you just saw examples that happened within the last 2 or 3 weeks that are still ongoing, as the Apple trade was, as well as I believe some other ones that we looked at. This is a great tool that I use each and every day in my own personal trading. It really has helped to make me more successful. By successful, we mean, our definition is learning to listen to the market. Since it's difficult to understand the language, it's a translator. So we're successfully listening to the market through our translator. This is what we mean by the meaning of success. And we really think it can help make you a more consistent trader, okay? As we close here and take one last look at our disclaimer, thank you so much for attending. I hope you learned something today. I hope you learned something about the way we want to teach you and make you a better trader. But most especially, I look forward to all of you becoming students of mine in the PET-D course. Thank you so much for attending. I wish you all the best of luck and hope to see you in class. Bye-bye.